All right. Get that roll call rolling. Eileen Hunt.
I am here.
Damian is absent. Chuck Gray.
Here.
Peg is also absent. Jackie.
Here.
Carol.
Present.
Wendy.
Here.
And Mark. I think you might have said you were here, Mark, but we didn't hear you.
I'm here. I'm here. I'm here.
And then one more intro from the DOI folks.
Bobby Baca, Director of Consumer Services, Property and Casualty.
Matt Mortier, Director, Consumer Services, Life and Health.
And I don't believe we have any members of the public. All right, let's roll.
I have a question about members of the public.
Yeah.
How would the member of the public know to log on? How would they do that? Do they go to the DORA website and then look for meetings and then see a link? How does that work? Because I have somebody who would like to do that. So.
Yeah, so the agendas are posted on the website.
Okay.
And the link is on the agenda.
Okay.
So
yeah, the agendas are supposed to be posted on the website, and I have to confess I did not get it posted yesterday. That was on my list of things to do, and I do apologize I did not get it posted. So, that is my bad.
I would assume too that because the agendas are public information, if you know of anybody specifically who wants to join the meetings, Wendy or anybody else on the council, once we get the agenda, we can share those.
Yeah.
Okay.
But they would use the same. So first up in our agenda today, Bobby is going to give us a little presentation on credit-based insurance scoring before we go over the revised Part 4 recommendation around credit scores.
Okay.
It's all you, Bobby.
I am in present mode. Can you guys see it?
I'm sorry, Bobby, for interrupting. Can people put themselves on mute if they're not talking? Because there is something in the background. Thank you, Bobby. Sorry.
No, that's okay. I was in present mode. Could you guys see my screen?
Could not.
Okay, I'm gonna have to go a different route here.
Now we can see.
Yep.
Okay.
Yep, good to go.
So credit-based insurance scoring. Just jump right in. Here's a couple of definitions that we have in our statutes with regard to credit information. And so 10-4-116 is one of our laws that applies to credit-based insurance scoring and includes these definitions. So credit information means credit-related information derived from a credit report itself or provided on an application for personal lines of property and casualty insurance. And then insurance score means a number or rating that is derived from an algorithm, computer application, model, or other process that is based in whole or in part on credit information for the purpose of predicting the future insurance loss exposure of an individual applicant or insured. So one of the things I wanted to let you guys know is that when the insurance companies run credit information, when they pull credit information, they don't actually see a consumer's credit score. They don't see the consumer's credit report. They pull information through an algorithm or through a model, oftentimes through LexisNexis or TransUnion, Experian, Fair Isaacs. Those are some of the main companies that main entities that companies use as far as modeling their credit, the credit information. So the information that's pulled from the credit report is then applied into this model, and they use an algorithm or some other type of model to arrive at a credit insurance score. So that's why it's referred to credit-based insurance scoring rather than just credit scoring or the use of credit. Other statutes that apply, Section 5-18-104 is in the Consumer Protection Act and provides, allows for insurance companies to use credit information in rating or underwriting circumstances. 10-4-116 is in our law. That's in the, obviously, Title 10. And that provides the 116 provides the allows them to use the credit information. That's where you'll find the definitions. It also has requirements as far as notices that are sent out. Talks about the fact that the companies have to comply with the Fair Credit Reporting Act, which is the federal law. And there's like a specific statement that has to be included in the application process, or if you're doing, if you're applying for insurance online, you would the company has to notify you that they will or may use credit information to determine your rate. 10-4-616 is disclosure, requires disclosure information again on credit information, and the 100s. So the 10-4-116 applies to all personal lines property, personal lines of property and casualty insurance. So homeowners, auto, boats, whatever an insurance company might use it for. 616 is in the auto statute, so that one is specific to auto insurance. The Federal Fair Credit Reporting Act, 1C3 is to a person with allows the insurance companies. Excuse me. This is the credit rating companies, allows them to report credit information to a person which the Consumer Reporting Agency has reason to believe intends to use the credit scoring information in connection with the underwriting or rating of insurance involving the consumer, and intends to use the information for any purpose allowed under the Federal Fair Credit Reporting Act and rules promulgated pursuant to that act. I'm sorry, this is the Title 5 in Colorado statute, not the federal law. But the federal law then talks about the consumer reporting agencies. The Fair Credit Reporting Act, I included a link on here. I will forward these slides to you guys so you have access to them after the presentation. A consumer reporting agency may provide information about you only to people with a valid need, usually to consider an application with a creditor, insurer, employer, landlord, or other business. So this is where the federal law gives insurance companies explicit permission to use credit information. 10-4-116 then sets forth again the disclosure requirements. There's certain factors that an insurer cannot use. And this is all pre-Senate Bill 169. So, and I don't think, and none of this changes with Senate Bill 169, which we'll talk briefly about a little later. So credit inquiries that are not initiated by the consumer cannot be used. Inquiries related to insurance coverage. So if you're shopping around for a new auto insurance company and you shop 3 or 4 different companies and each of them pulls a credit score, that cannot be used against you in the credit insurance scoring model. Collection accounts with medical industry codes. These are items that have to be identified on the credit report with a medical code, but if they are, then the LexisNexis, the Experians, those companies cannot include that information and cannot pass that along to the insurers. Multiple automobile lender inquiries within a 30-day period. So if you're shopping for a new car and they pull multiple credit reports to buy the car, can't be used. Again, within that 30-day period. So if it takes you 6 months to find a new car, you may have a hit, every 30 days or every 45 days, but they can't use multiple inquiries within a 30-day period. Multiple homeowner lender inquiries cannot be used if you're looking to refinance. Credit information adversely impacted by the dissolution of a marriage cannot be used. Disclosure requirements. This is in 116 and 416. I think I typed that last one wrong. I said 616, but it's 416. I apologize. Disclosure must meet the FCRA requirements, and the notification of an adverse rating must include the 4 top reasons. So if your auto insurance company increases your premium based on credit information, then they have to provide a notice to you with the renewal information that says that they have what the top 4 reasons are. So those top 4 reasons can vary by company, right? So some companies may use, if they use the LexisNexis model, and maybe they require that, or maybe they're looking for the existence of an oil card, or a Conoco or a Shell card. I would say most, if not all, probably are using the existence of multiple revolving accounts. And so those are some of the things you might find in those top 4 reasons. And they must file their scoring models, or a third-party vendor may file on their behalf. So every insurance company that uses credit has to file their model with us. They are more often than not considered confidential and proprietary, but they do have to be on file with us. Other considerations: the insurance companies do not see your actual credit score. I think I touched on this initially. So your credit reports, your credit information is filtered into that third-party vendor, the LexisNexis, and LexisNexis uses that information and then applies it to that individual company's model. So you may have 10 companies working with LexisNexis, and each of them could have a different outcome depending on that company's book of business and the model and the type of information they want to use. So there's no easy way to say that if company A may have a credit insurance score of a 1 to 5, and 5 is the best rating, where company B may have a rating scale of A to Z, where N would be neutral, A would be the best credit, and Z would be the worst. So every company files different rating factors. They file different tiering models. So if there's ever a complaint, when we get complaints on credit-based insurance scoring, we go to the company and we have to have the company tell us exactly how their model applies to this particular consumer in this particular situation. The division does hold the companies accountable for being able to explain that information. Sometimes they come back and tell us they can't, and we won't accept that. We go back and we say, you find somebody who can. Somebody has to be able to explain to the consumer how it was used, what information impacted their rate, and then if there's anything that can be done to modify it or fix it. One of the other things that the companies are required to do when they are sending notice that they're using credit information is they have to provide the consumer the name of the vendor that they are using. So, and the address and contact information. So if they say, we ran your credit information through LexisNexis, here's their contact information, you can contact LexisNexis and you can have a conversation with them about what is on your credit report. And if you find that there's an error in there, then you can work with LexisNexis or Experian or whomever the company is to fix that credit that information on the credit report that is errored. Could be somebody else's, maybe somebody has the same name with you, but it's a different, obviously different social security number, and that particular credit and that is not that particular credit information is not valid to you. It could be something where maybe it shows that a credit card was closed and really it wasn't, or maybe there's open credit card accounts that you closed years ago. And so those are things that you might want to discuss with the credit reporting companies. I will tell you that the insurance companies cannot help you with that. Most of the time when a consumer gets that notice, they'll call the company and they get a customer service representative. They are not credit advisors. We are not credit advisors, so they can't walk you through what you need to do to fix your credit or to correct something that's an error. Only the credit reporting companies can do that for you. So oftentimes we'll get complaints in where they want that done, and we can't advise the consumer on how to fix their credit. And I'm sure you guys know there's lots of those new apps out now, that you can boost your credit, or you can, do these things. And so I think the more and more consumers are more aware of what their credit is. The law allows you to get one free credit report a year from any credit reporting company. And we would just tell, we just tell consumers, take advantage of that and check your credit on a regular basis to make sure that there are no errors in that report. And then on here again, companies use various data points, and each company's business is tested to establish the credit factors that generate higher losses for that specific company. Again, some of these factors might include the existence of an oil company card, your mortgage history, whether, sometimes if you've paid off your mortgage, that might affect your credit negatively, or it might not. Again, it depends on the company. And then your debt to credit ratio is another factor. So Senate Bill 21-169 restricts insurers' use of external consumer data. Insurers are prohibited from unfairly discriminated based on race, color, national or ethnic origin, religion, sex, sexual orientation, disability, gender identity, or gender expression in any insurance practice, or pursuant to the rules adopted by the commissioner, using any external consumer data or information source, algorithm, or predictive model with regard to any insurance practice that unfairly discriminates against an individual based on an individual's, it goes through that list again. So basically, really what I wanted to bring up on this bill did pass this year. The commissioner's staff is currently planning, and they're working on putting together some stakeholder meetings to implement and write these rules. Ultimately, what's going to happen is the way I understand it is that these credit reporting companies like LexisNexis are going to have to really go through every single aspect of their algorithms and make sure that none of them have an effect on any one of these factors. Those stakeholder meetings will probably start up in after the first of the year. So Mark,
yes, this is Mark Wins. So the definition, Bobby, of unfairly discriminating, an insurance company can say it's not, in my opinion, can say it's not discriminating based on race, color, national, and all those things. But they could certainly set a rate that's really cost prohibitive for the consumer. So what's the definition of unfairly discriminating? Is it yes or no? No, we won't offer you a policy based on this? Or is it also cost prohibitive to discourage a consumer from purchasing a policy from a carrier? I'm just trying to learn, okay?
No, that's fine. I was actually going to see, we have a definition of unfair discriminate. I think there's a definition here. I'm looking. if it's in the rate section,
I think that's pretty important because, you've mentioned earlier, that they have to give 4 reasons to the consumer for whatever. Chuck would probably be interested in that one based on what he had told us earlier this year. But anyway, why, it's pretty important what the definition of unfairly discriminating is in this particular case, I feel.
I would be curious. I would be curious to know what fairly discriminating based on your race. How do you fairly discriminate as opposed to unfairly discriminate?
well, I don't think that race should never be used, whether it's fairly discriminating or unfairly discriminating. Those are factors that can't be used.
So what? Is it redundant or unnecessary to say unfair? Why doesn't it just say discriminating?
Well, that's a good question. I don't know. That's in the that was in the bill. I believe I copied that right straight from the bill, but so I don't know why it says that. But I will tell you there is a that unfairly so 10-4-403 is our rating, one of our rating statutes for P&C, and it says concerning unfair discrimination exists if, after allowing for practical limitations, price differentials fail to reflect equitably the differences in expected losses and expenses. A rate is not unfairly discriminatory solely if different premiums result for policyholders with like loss exposures but different expenses, or like expenses but different loss exposures. So is insurance rating discriminatory? Yes. Is it unfairly discriminatory? Not always. So insurance companies can show statistically that male drivers between the ages of 16 and 21 have a higher loss exposure than female drivers between age 16 and 21. And this is goes way back into my rate filing days. So they are discriminating by gender, but they can statistically show that males have a higher exposure than females do, or a higher risk than females do. So that is a case where, yes, it's discriminatory, but it's not unfairly discriminatory because they can just actuarially justify that. I don't know what Senate Bill 169 is going to look like once all the rules are put into place. This one actually also applies to all lines of business, not just property and casualty. So this will apply to annuities and health insurance and whatever other lines of business there may be. So, Chuck?
Yeah, I was going to say, when it comes to that discrimination clause there, what do you do in the cases where they are using some model of somebody's risk based on credit or mortgage history or all the things you mentioned, but if they themselves are underbanked or underemployed, but they might be a great driver, they live in a community that's underbanked, maybe they don't, because of their job, they're a good person, but they can't afford a house, so they rent instead of owning a mortgage, so they may not have much of a credit score. I don't know if that's fair or unfair discrimination, but it doesn't seem like it's fair. Gender is one thing, you can't lie about that. It is what it is statistically, but I'm just thinking about somebody who doesn't have a good credit history for reasonable reasons, and where they live and the type of job, but they may be, a great driver. So how do you show any kind of unfair discrimination? Because it's not going to look at that, right? It's not going to necessarily look at what community they're in. It's just going to look at their credit history, right?
Right. So what it's going to look like. So again, keep in mind that the credit information is a piece of the credit insurance score. So the credit insurance, the insurance scoring could include other factors that are debatable. It could include occupation. It could include it might include your miles driven to work or your annual miles, or there's other factors that could go into that insurance scoring model, and credit is just a piece of it. But I mean, yeah, I mean, I get it comes down to each individual company having to actuarially justify whatever factors they are using, whether it's you don't have a mortgage at all because you're a renter, or if it's I can't think of off the top of my head some other things, but I mean, these companies are required to actuarially justify these. We do have actuaries, and we do have our rates and forms people on staff that look at these to look at the actuarial justification to make sure that it is justified and appropriate.
So if a community has a lot of renters just because of the type of jobs that they do or whatever, they can't, change that right away. They can go ahead and say, well, all you renters are a higher risk than the people in the other community that are all homeowners. I mean, how do they figure that out and say that that's okay?
Yeah, I don't think they're going to look at it. They're going to look at it on an individual basis. They're not going to look at it on a community basis. They're, each individual's practices and life, the things that they do, whether it's, maybe somebody doesn't have any credit whatsoever because they don't believe in credit cards, so they pay everything in cash, or
right.
Something to that. Yeah. So what the statute says is that what the statute does say that if there's no credit at all, then they have to rate it as a neutral rating, right? They can't credit it or debit it. They can't charge you more. It would be like the base rate, the zero rate, if there's no credit at all. So that could, be beneficial for some consumers, or not, because depending on how the company's rating tier is structured, like I said, like a company with an A to Z rating, or where N is the neutral, then that means everything from A to M gets some kind of a discount, and usually that's could be anywhere from a 1% to maybe a 20% discount if you're an A type thing. And then anything from O to Z is going to be debited, and N is going to be the zero or not have any charges or credits. So, and again, these are, if a consumer were to file a complaint on this is something we would have the company explain their specific situation and how the rating model impacted that particular consumer.
And you're also saying that, let's say I get a solicitation in the mail from in my mailbox from a company wanting to sell me auto insurance. You're saying they don't go out and pull what's called a soft score, which I don't have any control over, or even when I go to get an actual rate, actual premium quote from the company I deal with, they're not actually pulling a soft score, which is whatever kind of soft score they contract, whatever algorithm they use. You're just saying that they pull data points from LexisNexis or whatever that could be in error, which then the consumer's on the hook, on the hot seat to have to fix those errors and try and rework that.
Yeah. So your soft hits are like, I don't think insurance companies or agents do soft hits because they would need your social security number. Where you might get the soft hits that are prohibited in the statute would be like the credit card companies that say, hey, you qualify for this credit card for, whatever, 2% interest rate or 0% interest rate. Those credit card companies are conducting soft hits before they mail you those. Those cannot be included in your credit information. And then insurance companies who are running your credit because you've asked for a quote, those cannot be included in your credit information either. So they're not considered. They're not hard hits. They're not gonna harm your credit score, your overall credit score. Carol?
I was just going to ask if under whatever consumer rights are, freedom of information, whatever, without asking for a company's algorithm, could the consumers ask for all rating factors that are being used by all companies? Not saying which company uses them, just so that the consumers would be aware of the breadth of of rating factors. Somebody, I don't know what's on the credit application. I see age is not protected under this new law, as far as I could tell from the slide. And of course, I represent seniors, so that would be a concern. And it is an issue, but is there any Freedom of Information Act, any kind of thing? I mean, who's going to audit the company's adherence to lack of unfair discrimination? I mean, certainly you can make the point that, mortgages, as Chuck was saying before, mortgages, renters, there's going to be a differential in a community by race. There is. So there's going to be more renters, and then if one of their factors is renters are discriminated against, fairly, can we get a list? That's the question.
Well, I mean, the public information is always available to whoever wants to request it. It's just a matter of putting that request in writing. It would be a request subject to the Colorado Open Records Act. There are company rate filings are available to the public on our website. Digging through them may be challenging. So if you were looking for something really specific, it would require an open records request and may be subject to a charge depending on the amount of information and time that it would take to gather that information.
My recommendation would be that this would be a consumer body advising DOI to have an open records request of all insurance companies that file with DOI to have not their algorithm. You said that was proprietary. They don't have to reveal their algorithm, but just simply a laundry list so that somebody could vet that list to see if it appears to be in violation of this new statute. In other words, this committee would make that recommendation, for example.
Right. So, but you're making a recommendation that those items be made public to the consumer. I mean, is that what you're saying? That you would?
Yes, not by algorithm, but just as a appendix or whatever. These are the different factors that are being used by different companies in different ways.
Right. I mean, yeah, that's something you guys can talk about doing. I would recommend that nothing be done until after the commissioner, the rules are promulgated pursuant to this statute. So, I mean, basically the new law just says that the commissioner can promulgate these rules, and that's going to be the commissioner and stakeholders that are going to establish those rules. And that process won't start until after the first of the year. So, Wendy?
Yeah, I was wondering, what do you find in terms of the workload and the nature of the inquiries and complaints? Is it substantial, and what kinds of complaints are there?
Overall complaints or complaints?
No, the insurance objections to the insurance companies using credit.
Oh gosh, I don't have those numbers right off the tip of my head, but we did just issue our consumer complaint report, which was due to the legislature on last Friday, and that may have some statistics on credit scoring complaints. I will say the majority of our complaints are claim handling complaints, but we do get complaints on rating and underwriting, and that including credit. But then our numbers of credit scoring complaints are not nearly as high as the claim handling. So anyway, yeah, I mean, you could, but if you find that complaint report, I'll double check and make sure it's been posted on the website. I know it was supposed to be sent to the legislature on Friday, so I'll need to make sure it's posted. Chuck?
Yeah, I was going to go back to what you were talking about before too, as far as if I get a quote or a premium notice in the mail and it says based on your credit information, and it lists a couple of general points. It says it could have been this, it could have been that, which is what my experience was. And it turns out I believe that there was an error in the credit report. You're saying that if I call that insurance company, their customer support people are just going to stonewall me. They're going to say it's none of your business, that we've given you the general items. That if I wanted to know, well, I think I've got an error, that I think they pulled something out of my credit that's an error, which I had happen last time, I would have to file a complaint with Division of Insurance in order to open up that book so that they would have to disclose, here are the things that negatively affected you in your credit. Then I can go to Experian or Equifax or TransUnion, get those things corrected. And then after they get corrected, can I ask that insurance company, are they required to re-rate me now if I found some significant errors that I've now gotten corrected? So I guess, do I have to start that with a complaint process because they're going to not tell me much over the phone?
Not necessarily. I think most companies, first of all, you're going to get that top 4 list, right? So if you see something in there that maybe you don't agree with, I would start with the vendor, right? I would start by calling LexisNexis. They're the ones that are going to have that credit information. The insurance company doesn't have that level of detail at their fingertips, right? I mean,
Don't they put that when I get the premium and it says your premium went up? I had this happen to me. It says your premium went up due to the following factors. Oh, you had this in your credit. Oh, you had this in your credit. And they know what caused it to go down, but they won't discuss it with me over the phone. And I said, well, I think that's an error. I'm going to go get that fixed. I don't get that fixed through LexisNexis exclusively, right? I may need to go to Equifax or Experian or TransUnion and see, hey, are there some errors in here? And if I do get those fixed, then I feel like I have a right to go back to that insurance company and say, hey, you need to re-rate me now.
You do. Yeah, absolutely. I mean, the statute is when insurance companies use credit information, they are required to rerun the credit no less than every 36 months. Or I'm sorry, no more than every 36 months. So if they're using credit information, they have to rerun it. But the statute also says that if the consumer requests it to be rerun, they will do that. They have to do that. So okay. Yeah, if you go out and you get something fixed that you know was an error on your credit, then you just notify the company and let them know that, and they will rerun your credit report.
I just found it difficult when that happened to me a couple of years ago, and because it didn't involve a lot of dollars, I let it go. But they were pushing back on the phone saying, we're not going to do that. We've already run it, blah, blah, blah. And I probably, if I'd gone through the complaint process at the time, I could have forced their hand a little bit.
Yeah, absolutely, because they are required to do it if the consumer asks.
Yeah,
so
and that's one of the problems with credit is that credit is fraught with errors. I've had both me and my wife. We found significant errors. She'd have things on her credit report, negative things. It wasn't even her social security number.
Right.
And so it really puts onus on the consumer to go out and chase all this stuff down. And it's not the same with other parameters that they use. If the insurance company wants to use your age or your address or what county you're in or what zip code you're in, driving record, that's very provable, easy stuff that's usually not in error. The stuff that's in error is the credit report and all that, that behind the scenes collection of data. And that's what scares me. But I know the law already says it.
I understand. Yeah, I understand. That's one, we talk about that all the time. So I'm going to stop presenting. Are there any other questions? All right, Anaya, I'm turning it back over to you. Oh, wait, we had a hand raised.
Question.
This is Mark Wynn. So I like Carol's suggestion for next year, once it gets promulgated, get the list of what they can use. It'd be more important to some of us what they cannot use, such as the actual credit rating score. And they can't use this and they can't use that. That would be, to the consumer, that's what most of the time we're looking for is, are you sure you didn't use this? Are you sure you didn't use that? But what they can use is quite lengthy. We're going to get a book. But I think what the legislators' intent probably is what they can't use. What have they seen insurance carriers abused in the past, and why is the legislation being brought forward so that they can't use X, Y, and Z, whatever that definition is. That's all I wanted to say. Thanks.
Yeah. And one more thing, just, sorry, I thought I got an echo on there. If anybody has any interest in the stakeholder meetings, or you have any, any questions as that's going on, reach out to Deb Judy. She is our legislative liaison in our office, and I think she's going to be spearheading those stakeholder meetings. Let me find her email address for you. Her email address is Deborah, DEBRA .Judy @state.co.us. And that's probably going to be the best way to get a hold of her, is through email, if you're interested in having more information regarding the stakeholder process.
So this is Jackie. I can't find the hand raising button. Sorry. My frustration is that the things that I was frustrated with when it happened to us, really, they were not errors. They just seemed like ridiculous ways to judge your ability to drive your car. And it's kind of, as Bobby was saying, if you paid off your mortgage, it goes against you. Well, we didn't pay off our mortgage, but we didn't owe any money on our vehicles. And the fact that we do fully own the vehicle is charged against you. And so when you get to a certain point in your life when it's really, what I think it was Mark who was saying, it's as you age and you begin paying off some things, it's going to be held against you. And that really isn't a factor in the new legislation. So I don't know if it's going to help us at all, but it's still a frustration to me. And I think I mentioned it to this group before that I applaud the division, because I did complain and they followed up and they got the insurance company to itemize very specifically each item and how much it raised our insurance. Most of them were small dollar amounts, but it was good to see it that way. The 3 or 4 items listed by general category gave me no information at all. When we finally dug into it, at least we could understand what was happening. We didn't agree, but we could understand. And I don't know what more we could do to make that any better.
That's a common concern that we see at the division as far as our complaints go. So, and I don't know what the answer is either.
Does anybody else have any more questions for Bobby on this? Or I think potentially our next conversation might create some questions or comments too. So we're just going to move on to talking about essentially the same thing, but the recommendation around it. So I'm going to share my screen. So Eileen, I can't see anybody anymore. So if you can keep an eye on things for me.
Happy to do that, Anaya.
Thank you. Can everybody see R4?
Yes, I can.
Did you all have a chance to
Yes.
take a look at the new language that I put in? Or do we want to go through it piece by piece?
Well, this is Mark Wynn. So the first thing is the title. Maybe it should say credit-based score ratings for insurance. Based on
Yeah.
Bobby's discussion of, don't just say credit, credit score. Just a recommendation, that's all.
Yeah, no, that's great.
And then is this, I'm sorry, I don't mean to dominate. Someone jump in. I'm just asking questions. Is this person that wrote this individual back on May the 20th of 20, was this person addressing a specific type of insurance or just all insurance? It kind of looks like it was written mostly toward auto, but it's written this way and to all insurances. I mean, was this, or does anyone know? I'm just asking. I don't know.
So I believe initially it was around auto, and then we updated in our last meeting, decided that I would update the language to work in accordance with the bill that was passed this session, because that was something that was already happening. So I think also, I mean, if we're going to make a recommendation around credit-based scoring, then it makes sense to do it for all types of insurance as opposed to just one, since it's a lot harder to require something of one type of insurance coverage versus all types that are regulated similarly.
And it seems like a property type of insurance, because you notice health insurance, if you apply for ACA health coverage, they don't do any of this stuff. It's only what your zip code, your age, a couple of very basic things, and they can't go beyond that.
Right.
Yeah, just age, tobacco use, family size, and geography, which I think means zip code, but yeah.
Wendy, you can go ahead and talk.
Okay, so when I see the recommendation, it looks like, as I read it, it looks like we are recommending rules that would address social media habits unrelated to credit scores. In other words, just in terms of language, it's missing. I think the intent is to say credit scores that reference or include or based upon those other factors. Am I right that that's the intention, to say credit score should not be based upon all the other things, social media, location?
No, so those parts have nothing to do with credit scores. That's just additional language about soft measures that were also in the bill. So a lot of the language in these encompasses the language from the bill itself.
Okay,
And credit
rules.
scores were just a portion of it.
Okay, so they are independent categories.
Yes.
Okay, I guess the department would read that as saying rules in reference to the bill number XYZ be promulgated. Because
Which is at the bill numbers at the end of that statement.
Right, but the category title on top is credit-based score ratings.
Mm-hmm.
So it's all. And
we can change the title of the recommendation. I just didn't do that because I didn't want to make that decision for the council.
Okay, to me, it's just a little confusing, but if.
Well, I think the credit score was the main point, but as other examples of soft measures, we were talking about those other ones last time, because when somebody's out there modeling this stuff, they can come up with models that use so many things that could be full of errors and subjectivity and whatever. And credit score was just one example of that.
Right, right. So shouldn't we tie the title to the recommendation more directly?
We absolutely can.
Yeah, okay.
So we could say something like credit-based score and other soft measures used in insurance rating.
Does that work?
Oh, I like that.
I think it works.
Yeah, it's fine.
Soft-based measure, soft score rating,
Mm-hmm.
or soft score-based ratings. Soft measures, as you first said, soft measures.
And who knows which ones are actually using in their model, but it's just, it's endless. They could just, what flavor of ice cream do you like? I mean, it could come up with so many things in their models, and I think it's kind of ridiculous. I think just like with health insurance, they should, in my mind, I like to see them stick to things that are provable, like zip code, age, and driving record, things like that. Or if you own a house, they can't, I don't know if they use all these things for homeownership, or they mainly go with the claims against that property over time and what zip code you're in. And are you in a zip code that has a lot of hailstorms, and that kind of stuff's very provable.
So, Anaya, I like the way the wording is. The question I have is, these rules are in the process of being set up. I mean, it's going to happen. There's going to be hearings. So is the recommendation really necessary? And is there a different recommendation that we want, perhaps the one that Carol brought up?
And I think we can do that too. I think it's never a bad thing to put more on public record, to push any state department or division to do something the best way in a stakeholder process. So while those stakeholder meetings will happen, I think that having this on record from the council is still a helpful tool. And maybe we add another recommendation around what Carol was talking about.
Because I think what we're trying to do with this particular recommendation is that as the rules are being promulgated, that they look at disallowing these items.
Wendy?
So how about, I mean, the penalty for having lack of debt, as Carol and Jackie raised, lack of debt to me could be called a soft measure. That's why I've never heard an explanation why lack of debt decreases your score.
Yeah, and I think that would be included just under not allowing the use of credit scores in general. Like if they can't use credit scores, then lack of debt doesn't play into the decisions. They wouldn't be able to look at whether or not somebody has debt necessarily.
Okay, that's fine.
Yeah, but I agree. I mean, our credit system is a little backwards.
But they are able, however they did it, I don't know, but they were able to know that we did not owe money on a vehicle, that we owned the vehicle outright. There was no lien on the vehicle. So that was a factor.
It's just public record.
Mm-hmm.
Yeah. And we could add that language in if we want to. It's not present in the statute. So it could potentially go outside of the scope of what DOI is able to do with these new rules, but we could always try.
I think we might just get more frustrated. I think there's more than that one particular item. That's the only one that I'm remembering at the moment. But I'm more concerned about the items that affect people who are in those categories that get discriminated against.
Yeah, and I think that, I mean, what you were talking about, Jackie, with getting dinged for having a car that's paid off also impacts a lot of those same communities, because they're often don't have the credit to get a loan for a car, or buying cars that are under the amount that exists that you can even get a loan for. So a lot of folks within like low income communities and BIPOC communities own their cars outright already if they have them, because they're buying cars that are, $900, $1,500 that they're not going to have access to a loan for anyway.
Good point.
So it has the same impact, just in a different kind of way.
I just wanted to point out one thing, which is about penalties against credit companies that have either negligent or willful misreporting. The Fair Credits Act does allow you to sue those companies. So there are other states who are perhaps have stronger measures and penalties, but there is that ability within the federal law as well. So that's just something that, you say, how can we affect these people that have these errors in your reports? Well, you can bring that up in the rulemaking related to, this new state law here.
Any other thoughts or questions? Or Mark, what's up?
So maybe Bobby or Matt could explain, but why did the state of Colorado legislature take up this particular issue this year? What's driving this particular legislative action? I mean, usually there's 2 or 3 reps or senators, or what's the history behind this? Because what I'm trying to figure out is, again, the intent of this is to, rule out unfairly discriminatory practices, but there must be 2 or 3 things in here that's really what drove the passage of this bill. Or can you guys comment? Maybe you can't, maybe you don't know the history of this bill.
This is Matt. I'm just going to say that I know that I wasn't following this one incredibly closely. That email that Bobby talked about and that I threw in the chat to Deb Judy. Again, she's our deputy commissioner who handles legislative affairs. If there's any questions, I would recommend reaching out to her because she, again, tracks all the legislation that affects the division and kind of evaluates it and looks at all that stuff. So she would probably be the best person, I think, to really give you an answer about, kind of what the legislators were looking into with this. Because I know I don't know unless Bobby has something to add.
No, I didn't follow it super close either. My understanding is this was actually a DOI bill, and the commissioner was driving this initially. It went through several iterations. I mean, you can go onto the General Assembly website and you can see the different strike-throughs and the iterations and stuff. But Deb Judy would be the best person to talk to on any specific questions. And I mean, if you'd like, we can see if she can attend the next meeting if you want to wait that long, or you can reach out to her individually.
No, that's fine. There's always something driving something. So I just want to know what the drivers are. That's all.
Yeah, and Mark, I didn't follow it super closely either, but I know some of the conversations around it were essentially like because of the impact that these soft measures have on people's ability to access specifically homeowners insurance, really disproportionately impacted the ability of a lot of people to own homes because they didn't have access to the insurance they needed for the mortgage company to lend. Any other?
So yeah, so I think we should go ahead and move forward so we can get the rules promulgated sometime in 2022. Let's go.
Yeah. So do we have, is that an official move to approve this, Mark? Do we want to check in and see if there's any language that we want to change first, or reword or add? And if not, Mark, you want to move?
Yeah, I move to recommend R4 for commissioner comment as written, except for the title change that was made online.
Great. And do we have a second?
I still second that.
Great. All in favor?
Aye.
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 Any opposed? Great. And then next on the agenda, let me stop sharing my screen so I can see people again. That is the only recommendation we had on the list that we haven't either approved or removed, but I just want to go through and double check. I think there was still one we were potentially waiting on more information from.
Looks like it's the very next one, R5.
R5, yeah. Did we get, that was the one about escrow issues? And I know Peg had kind of more of the information on that one. But do we know if we got any further information about whether it was actually related to a state regulated insurance issue or escrow accounts in general? All right. Any new recommendations that folks have that they didn't have time to get to Bobby before the meeting? Great. And then Bobby or Matt, I'm not sure, did we have any new responses from the commissioner since the last meeting?
No, but there were, I went through all of the recommendations and there were not any that hadn't been responded to already, so.
Great. The other thing that we needed to chat about in when I opened the agenda in Google Docs and it changed my formatting, so it's a little wonky, but we had to talk about member renewals because I believe nearly all of our terms are ending, aside from Mark and Chuck. So I don't know, Bobby, I had DOI staff on to talk about that on the agenda. I'm not sure if that's something that we need to try to do at this meeting. I know at our last meeting, we talked about having a final special meeting before the end of the year. But Bobby, can you just kind of walk us through what we need to do or think about in regards to the end of a lot of our terms?
Yeah, so Matt and I spoke to Vince Plymell, who is one of the deputy commissioners, and we think that just for the sake of simplicity, that if you guys just email us and tell us that you would like to renew your term for a second term, I think the statute allows for 3 terms. So if you want to just email, you can email the Consumer Insurance Council email box. Let us know that you would like to renew your term, and then that will be presented to the commissioner, and he will, yay or nay. I can't imagine he would say no to anybody, but yeah, then we'll just go ahead and roll it over if you guys choose to do that. If you choose not to, if you just let us know that as well, if you don't want to renew your term and be a part of the council any longer, then just let us know that as well, so that we know what we're looking at. We Vince and Matt and I also talked about getting another an advisory out saying that we're looking for members. So we'll be working on that as well. So.
Cool. Thank you, Bobby. And then do we collectively as a council want to try to squeeze in another meeting before the end of the year? Or we don't currently have any recommendations to go over at another meeting, but is there any other business that the council wants to attend to before 2021 kicks off, or 2022 kicks off? I've clearly been very present this entire year. And then other question, we will need to elect new chair and co-chair before January. So we could have a special meeting just to do that, or that's something that we could likely do via email if we want to get nominations today and go through that process online rather than in a meeting.
And would you expect our next meeting to be in person, optional, or still remote?
So we are not going back to the office now until January 18th at the earliest. So the January meeting would be virtual again. So yeah. And Matt, I think you had something else you wanted to bring up before we end the meeting, but just so you guys know too, the chair can, I think the chair can serve 2 consecutive terms. So again, that would be if Anaya chooses to do that, but the chair can serve 2 additional terms or 2 consecutive terms.
As much as I would love to do that, I won't be serving a second term on the council. So I won't be able to serve a second term as chair, unfortunately. My work capacity is a lot right now.
I'm sorry to hear that. You've been doing a great job, Anaya.
Thank you, and I will miss all of you, but
Same
I
here.
just won't. I can't commit to things that I can't put all of my focus on, and I think you all deserve more than that from a chair and from your fellow council members. And I just don't have the capacity these
Maybe
days.
give up sleeping. Just give up sleeping.
Oh, I already only sleep like 3 hours a night, Chuck.
Quit your job. That's an option.
Who am I moving in with? If I can do that. I also would love to do that, Wendy. That would be great.
Well, that's a tough act to follow, and all I was going to say is that we did speak to our AGs kind of about, the recording of the meetings is great for, equivalent of taking meeting notes, things like that. The one thing they did recommend is that, kind of, and I know Bobby addressed this in the email that went out with the agenda, just again to kind of have someone jot down kind of, major decisions or decision items or things. So there's at least a written record of kind of like this last recommendation. Like, yeah, we talked about this recommendation on credit scoring. The decision was made after revision to forward it on to the commissioner for, consideration. Boom, that's enough. Just so there's something just in case. I know this will never, ever happen, but technology occasionally does fail, just in case a, recording goes haywire, the internets go wonky, solar flare destroys satellites. I don't know, but just have something in writing as a backup just in case. So that's all I wanted to bring up about that. So just wanted to mention.
Yeah, Matt, technology is flawless. It's not like Instagram and Facebook went down for an entire day and millennials lost our minds this week or anything. It was fine.
I could hear the mine exploding all over the horizon. I could hear the pulse. Yeah, it was pretty crazy.
Yeah, it was a rough day. Thanks for that. So I don't know if it makes sense to everybody else, but it might be beneficial to elect a secretary also, just to make sure that there is one person who maybe isn't necessarily in charge of taking those written notes every meeting, but is at the very least in charge of making sure that it gets done. Just a thought for moving forward. Yeah, Mark?
I've been taking notes. I'll put some short notes out. Fine, let's go.
Thank you, Mark.
Thank you, Mark.
So does anybody have any thoughts around how we want to move forward with electing at least a new chair for next year? Do we want to have another meeting? Do we just want to do that via email? If we do it via email, do we want to nominate some folks before we end this meeting today, or nominate via email as well?
I'd like to do what we can today while we're physically together. And I'm wondering if Eileen would accept a nomination to chair.
I appreciate that offer, Jackie. I'm putting myself back on camera, but like Anaya, I'm going to have to drop off of the council as well. I'm sorry to say.
Darn.
Yeah.
So it looks like we'll be nominating the chair and co-chair.
Is another question, and I think I know the answer to this, but has there been any interest in being on the council from outside this group, or has anyone been talking to anyone to not for officers, but just to join the council?
Yeah, this is Wendy. I have somebody who's interested, does volunteer work with CCHI. So has got a health related, consumer health related background.
Great.
Maybe we need to advertise.
Yeah, so I'll get with Vince and we'll get a push out, a notice out to, that there will be positions opening up. I would also like to ask, I mean, if you know anybody, like Wendy does, if you know anybody that might be interested, Anaya, if you know anybody that could take your place, just have them submit submit the online form. I check it I check it about once a month, and we have not had any new applicants since Mark and Chuck applied last year. So yeah, so if you know of anybody, just give them our website and tell them to fill out the form, and we will we'll go through them, and we may be able to loop back to some of the prior applicants that we that may have qualified but we didn't select previously. So I'll have to look at some of those too.
Well, and this is, I mean, for me, my impression is a lot of people don't even know this group exists, council exists. So they might be interested out there in my neighborhood or your neighborhood, but they don't know about it. And so I'm going to have to try and mention it to some people that I know because, yeah.
So maybe we need to ask if there's anyone who on this group who's interested in the chair or vice chair, because I hate doing things via email. I know voting is one thing, but people can at least express their interest or disinterest.
Do we have anybody interested in chair, co-chair positions?
How many people are missing right now?
Peg and Damien are not.
The two. And it's hard to nominate somebody who's not here.
Can I maybe make a recommendation or suggestion that allow us to make a push out there, see if we can get some more applicants, and then maybe vote on the chair and vice chair at the January meeting, if we can get more members by then.
I think that's a really good plan, especially if there's going to be new people. I think they should be involved in that process. Bobby and Matt, I just want to make sure that you both know that likely means one or the two of you carrying a little bit of a heavier load for the January meeting. So then the council will be operating for that meeting without a chair or co-chair.
Right.
Well, that's probably a good idea because who knows, you may find somebody that wants to come on the council who's really qualified and really wants to be chair or co-chair.
Yeah, I think that makes sense. Everybody in agreement with that as an option to move forward?
Agreed.
Agreed.
Yep.
It's okay.
Good.
I move we adjourn.
Any other business?
Can I ask a quick question? Whatever happened to the emails that were going to get set up? Did I miss that? Was there some?
I think that's still undergoing the state process.
Okay.
It is. I think that's IT.
Yeah, I'm assuming I'll get mine sometime after I'm not on the council anymore.
Anaya, if both you and Eileen, if you can email me or email the insurance council email address that of your plans, and then we can get that ball rolling as far as removing you from that email list and everything too. So
Absolutely.
Thank you. Will do.
And we don't have any members of the public, so I'm assuming there is nothing for public comment today. And so I will adjourn the meeting of the Consumer Insurance Council. Keep in touch, y'all.
But before you do, I'd like
Yes.
to thank you, Chair and Vice Chair, or Co-Chair. Is it Vice Chair or Co-Chair? I don't know. For all your work this year. You both did a great job. And thank you very much. I know you had to put up, especially in those early meetings, trying to get through our principles document. That was always fun. But at least we've got one. And so these meetings now are running a lot smoother. So thank you very much for your time on the council.
Absolutely.
Ditto. Ditto, ditto.
It was a pleasure to work with all of you for the past 2 years. And I appreciate the opportunity for sure. Thank you.
Thanks, everybody.
Bye.
Thank you.
Have a good rest of your week.
You too.
Thank you.